Hi everyone, and welcome to Regulatory Unwrapped. That name might sound familiar to you, but now we're diving deeper into the issues you may have heard us report on. In this series, I'm joined by experts at the forefront of the regulatory landscape in an area we call financial regulation to discuss the area's most pressing issues. Joining me today to discuss the FCA's latest non-financial misconduct framework consultation is Nathan Willmott, partner at Ashurst law firm, and Global Relay's Director of Regulatory Intelligence, Rob Mason. Thank you both for joining me here today. I'm very excited to have you. For the benefit of our listeners and our viewers, it would be great if we could get a bit of an intro to you both. So Nathan, do you want to start?
Thanks, Aarti. It's great to be here. So I'm Nathan Willmott. I specialise in contentious regulatory matters. So I represent firms and their senior management when they come under investigation by the FCA and PRA. And then I also conduct internal investigations in relation to conduct issues for financial services firms.
Great. Thank you. And Rob?
Hey, thanks very much for having me. I'm Rob Mason, the Director of Regulatory Intelligence at Global Relay. Most of my experience has been on the compliance and regulatory side. I worked as a compliance officer at a couple of tier 1 banks where I had responsibility for the oversight of market abuse monitoring, as trade surveillance and comm surveillance. Principally, that was at UBS, and those of you who've been in this space for a while will recognise UBS hasn't had the most smooth or non-checkered history, having been wrapped up in LIBOR, FX and rogue trader scandals. Just like to say that none of that happened when I was overseeing their monitoring. Before that, I spent 5 years with the UK's FCA, helping to set up and supervise the market abuse regulations.
Amazing. Thank you so much for that intro. So just kicking straight off into it, it would be great to understand both of your opinions on how the FCA has obviously extended its non-financial misconduct consultation to non-banks. What are both your thoughts on this? Nathan, let's start with you.
So we had CP 2518, which was a bit of a mixture of some consultation and then a policy statement in terms of extension of the scope of the COCON rules, so the conduct rules that apply to individuals, in relation to non-banks. So historically, we've had this slightly uncomfortable position where essentially in relation to banks, all the activities of their staff are subject to the conduct rules, whereas in relation to non-banks, it was only if you're carrying out regulated activities within those firms that conduct would come within the conduct rules. And this change has been to expand the potential application of the conduct rules to conduct such as harassment, even outside the scope of carrying out regulated activities. So it's quite a technical change, but one that's been trumpeted by the FCA in terms of bringing non-financial misconduct into non-banks.
Yeah, definitely. I can definitely see that. Rob, it'd be great to get your thoughts.
Yeah, I mean, I think that the big deal here is there's 37,000 firms that previously haven't really been in the regulator's sights and therefore probably not reasonably well equipped to understand or manage this particular challenge. Now, not in every case, and obviously the regulated activities of some of those firms may have had some personnel there, but the huge majority are probably quite fresh to this. When you look across the population that we're speaking about, when we're talking about a non-bank population, it could be hedge fund managers, mortgage brokers, but certainly also insurance and accountants firms. Well, they're in organisations which haven't really needed to be focusing on this area. And I think the governance and the structures which they have in place probably don't easily meet this. So they're going to probably need to do some work to come up the curve in order to manage their non-financial misconduct areas of concern.
It's interesting. I think it's a good intention by the FCA, but are firms and have the FCA set out the rules clearly enough? And that's something we'll obviously dig deeper into. Do you think that's played a role in why it's taken the FCA so long to implement its framework, or can that be accredited to something else, Nathan?
Yeah, it's a great question. So it was back in 2018, so nearly 7 years ago, that Chris Willard gave that speech where he talked about non-financial misconduct being misconduct plain and simple. It then took the FCA nearly 5 years to come out with a consultation paper in order to make clear that its conduct rules applied to non-financial misconduct. They issued the consultation paper. There was consultation responses went in 2023, and then it went quiet again, and everyone was wondering when we would be getting a set of new rules. We then got a follow-up consultation in July 2025, so CP 2518, which had a different set of new rules and guidance. And then more recently, we've had from the FCA in October 2025 a letter to the Treasury Committee where they've said, actually, we haven't yet decided whether we will even implement these new rules and guidance, which has added a certain amount of uncertainty as to what the FCA is actually planning to do. They've said that they'll come out with their decision by the end of this calendar year. But in terms of why it is that they've taken so long, I think that they found this a very difficult area. Initially, they consulted both in relation to proposals on diversity and inclusivity and on non-financial misconduct. They decided not to proceed with the diversity and inclusivity proposals. And then in terms of deciding exactly what to do in relation to non-financial misconduct, I understand that the proposals have gone to the board and then come back again a number of times. And, I think even with these latest set of proposals, they fall a long way short of really what's needed from the industry.
Yeah, it's interesting to pick up on a couple of things there. They've had a couple of false starts around, I guess, D&I to a degree, diversity, inclusiveness, and whether or not that should be included here. We also saw the name and shame debacle where they've kind of gone down one route and majorly U-turned. And I suspect that whilst the FCA has often confirmed that bad conduct may also mean bad market conduct, and therefore they're very keen to do something in this area, it is a minefield potentially. And to try and define exactly what is required has taken them a bit of time, and I think remains still taking time to ensure that they give a fair amount of guidance and understanding for the industry to try and comply with.
Yeah, definitely. And I guess off the back of that, what do you both see as the biggest issues with how firms should identify and escalate misconduct in regards to the consultation?
Yeah, well, I mean, at the moment, because their rules are so unclear, we see huge inconsistency in approaches to policing non-financial misconduct within financial services firms at the moment. So we see, I guess, typically, you might say, the large retail banks, which will apply the spirit of what the FCA has communicated in their speeches in terms of what they would like firms to be doing in terms of policing non-financial misconduct. So taking a fairly hardline approach in relation to policing the conduct rules. Whereas other firms will look at the rules, will look at the current guidance, and will make an assessment based on, well, what would the upper tribunal say if this matter came before the upper tribunal? And based on the current rules, they will say, well, actually, even where there are pretty clear instances of what we think of as non-financial misconduct, so bullying, harassment, sexual misconduct, the outcome will be, well, actually, this isn't a breach of the conduct rules. It may lead to internal disciplinary action, but we don't view it as a breach of the conduct rules. So at the moment, we've got the same conduct in two different firms will result in two very different outcomes. And then that will have very different implications for those individuals' future career. And I think that inconsistency is quite damaging for the industry.
It's always a bit of a standoff, and the industry might be seeking some prescription, and you've got this age-old sort of conflict between prescriptive regulation and principle-based regulation, particularly around a subject as wide as non-financial misconduct and what that's really truly defined as and what those examples are going to be. There's no prescriptive list that's going to be able to be ticked back. However, I think it is incumbent that the FCA provides some real clear definitions. And I think over time we'll see some further guidance, and that might be through speeches or messages which they deliver. I suspect we'll see some enforcement, which will again give a good, strong indication of where they feel the line should be drawn. But it will be difficult for firms to undertake this. There's a number of other regimes that are like this, I think, in the sense of you've got an inherent risk, and then you push your control framework across it, and you're left with a residual amount of risks. But firms are encouraged to undertake a risk assessment to see how that really prevails within their organisation. Will that be different? Certainly the understanding of that is likely to be different at every firm that you visit. So I think there is going to be a requirement to try and give some clear rules, clear guidelines for the industry to follow. And we've said that takes a bit of time. I think that's fair that it will. Putting those structures in play will also take some time for firms to be able to identify, escalate, and then report that misconduct.
Yeah. It's interesting on the enforcement side that, so to date, the FCA has never taken any disciplinary action, and I use the term disciplinary action in a technical sense, in relation to non-financial misconduct. It's taken supervisory cases where it's prohibited individuals based on criminal convictions, for example, fare dodging in relation to other offences, but it's really operating with one hand tied behind its back in terms of the conduct rules, because at the moment you have a duty to act with integrity, you have a duty to act with due skill, care and diligence, but all of the examples that are given within the COCON chapter of the FCA handbook, none of those are non-financial misconduct examples. They're all examples of more financial conduct within the workplace. And so as a result, although the FCA in its recent letter to the Treasury Committee said it had 76 supervisory cases, active cases where it's looking at non-financial misconduct within firms, I'm pretty clear that none of those will end up in actual enforcement action in which a fine is imposed on an individual for misconduct because of this existing deficiency with their rules. The courts have made clear you can't just say that the duty to act with integrity it's obvious what it means. It needs to be defined within the handbook. And really, it needs to be defined in evidential rules within the FCA handbook rather than in non-binding guidance. And at the moment, the paper that's being proposed has various examples, but they're in non-binding guidance, which will give you an idea of how the FCA wants you to interpret those rules. But actually, if it gets to argument before the upper tribunal, they're not going to have any weight in interpreting what the rules actually mean.
Yeah, for sure. And it kind of goes back to, it's all well and good to have these rules, but the challenge is in applying them. And I guess because it's so open to interpretation, it'd be great to get both of your viewpoints on the sort of how fitness and proprietary relate to the consultation, and can it be assessed in the context of personal misconduct?
Yeah, I think what's becoming a particularly challenging area as this journey progresses is there's been some messaging out of the regulator, out of the FCA in particular, which talks about public life and private life. So what do you do in your professional life at work? But there is some references to people's personal lives. Social media has also been brought up, and we're into a very, very difficult area immediately. I think that the fitness and propriety and having access to people's personal social media is going to cause a very, very difficult set of circumstances for many. Increasingly, we are seeing the FCA take some action in social media circles. We're seeing them prosecute at the moment some finfluencer activity. Clearly, it's an area of contention, and the audience which social media now has in modern life requires them to have some oversight of that. What will be the outcome of that is really, really challenging to predict. However, it is feasible that, particularly for senior employees or people whose fitness and propriety needs to be measured and tested, those social media credentials need to be checked. It might well be that if you have another suspicion, at least you've got access to them, so you can then see what they are, as opposed to them being rigorously reviewed on an ongoing basis. But I think social media is certainly an area where we're going to see a lot of difficult decisions that companies are going to take, and it probably is going to end up polarizing some in terms of many will want to look at their employees' social media and many will not want to open that can of worms.
That's right. And we've always had this separation between the conduct rules and before them the statements of principle for approved persons, before SMCR, and then fitness and propriety. And it's very clear that those individual obligations that are owed by financial services employees are only owed in relation to what you do in the workplace. And I think that the proposed guidance to show what is within the workplace and what isn't. So, for example, a work drinks event would be considered to be a workplace event. Understanding quite where that line is to be drawn, I think is quite helpful. But we've always had the position that when you're assessing someone's fitness and propriety to work within the financial services industry, you have a much broader consideration, not just of what they've done in the workplace, but also what they've done in their home life. And I think that's right. But as Robert says, that brings real challenges in circumstances where you have suspicions or people have raised concerns about conduct in an individual's home life and how on earth you can investigate that properly. And, the paper says, it may be that you're not in a position to be able to investigate that properly as a firm. And so you may need to put questions to the relevant employee, but they seem to accept that you can't go beyond that. And so absent a criminal conviction, for example, some concrete finding, I think it's very difficult for firms to come to a proper conclusion about something within an individual's home life. There's also the broader question of, what sort of dishonesty counts for fitness and propriety. We mentioned the fare dodging, the fact that a conviction for repeated fare dodging was considered to be something that rendered someone unsuitable to work within the financial services sector. But there are other instances of dishonest behavior in people's life. If you deliberately drive over the speeding limit, are you acting dishonestly? If you lie to your partner, are you being dishonest? The FCA's traditional approach that if you're dishonest in any aspect of your life, then you are at risk of being dishonest within the workplace. Quite where those boundaries lie, I think is very difficult and not really one that the FCA has come to a landing on.
I think going back to the social media, it also kind of feels as if you are either seen to do something or have printed something. The reputational damage that's attached to a firm in conjunction with an individual in certain social media channels, LinkedIn leaps to mind, obviously. No one's LinkedIn really announces them as a single individual contributor. They're attached to an organization. That organization then might be attached to a sector, an industry. And, is there the feeling that this is going to be bad for the economy because an organization persists in that ecosystem and is a contributor to that with people who behave poorly within it? I do think this is an interesting area. It's going to be very, very difficult to see some enforcement action, but I certainly think that firms will take a very, very tough line on making sure their reputation, which appears to be more important than anything previously, that their reputation remains as intact as it can.
Yeah, definitely two interesting areas there, social media and to what extent can our personal lives dictate our professional lives? How do we draw that line? And I think when it comes to firms taking a tough line stance and driven by reputation, as you mentioned, Rob, how much is it driven by optics or a desire to actually do the right thing? Can you measure that? I wanted to go back to your point about, and I kind of touched about the FCA's letter to the Treasury Committee and SMCR. How then do you think SMCR fits into individual conduct oversight?
I think that when you think about an individual's conduct within the workplace, they have duty to act with integrity, duty to act with due skill, care and diligence, amongst other responsibilities. And those are duties imposed on most individuals working within all financial services firms in the UK. In terms of making non-financial misconduct fit within that duty to act with integrity, I think what's needed is a set of clear, high-level evidential rules to say that, for example, bullying within the workplace would constitute a breach of the duty to act with integrity. Harassment in the workplace would amount to a breach of that duty. And then similarly, in relation to the duty to act with due skill, care and diligence, the FCA in its draft paper has proposed guidance making clear that if you are the manager of someone who reports issues, then there is a duty on you to ensure that the issue is properly investigated and proper action is taken, and that the firm has proper policies in place. And I think that makes sense, but I think, again, that needs to be set out in evidential rules rather than in non-binding guidance. I think you can have quite high-level provisions that are non-exhaustive, that set out examples of non-financial misconduct that would amount to a breach of the duty to act with integrity. I don't think that would tie the FCA's hands, and I think it would help firms to take a much more consistent approach in terms of policing the conduct rules within their organisations.
I'll add to that. I think that the nature of the survey that was undertaken, and also in the backdrop of the other regulatory issues that have been observed, where the senior managers, senior executives, senior compliance officers who've been found to be using WhatsApp as a non-recorded business channel and knowingly do so, and the number in the survey that was suggested was something almost half of those recorded as breached were senior members of staff, suggests that the regulator is kind of aiming at that area, and perhaps that's rightly so. And we talk about senior managers certification regime, right? This isn't necessarily everybody. So I think really that's the folks that they're trying to aim this at, and therefore that helps to narrow what is and isn't acceptable. It's not straightforward, and we remain in a difficult area, but I agree with you. Once we get those definitions in place, we're in a much stronger position to for folks to understand what is and isn't acceptable in the workplace and outside it.
And then I think in the context of fitness and propriety, I think the FCA is trying to twist the definition of fitness and propriety beyond what it's naturally there for. So essentially, you have a test to say, is this particular individual fit and proper to perform the particular role that's proposed for them in the particular firm, given the framework, the risk management framework and governance in that particular firm. And you take into account all the circumstances of the case, and that's currently the test that's applied. The way that the FCA is proposing to amend that is to say, even if you conclude that the individual is fit and proper to perform that particular role within the particular firm, if their past conduct in some way offends the FCA's statutory objectives, then you should still consider them not to be fit and proper. And this, I think that's an improper twisting of the fitness and propriety test to try and deal with situations where someone has a conviction for something that makes them unsavory, but doesn't make them actually incapable of performing their role properly. And, I think the FCA should have other means for dealing with that sort of situation rather than twisting the test and making a more difficult job for firms in terms of how they make that assessment, because that's essentially a test that firms need to conduct themselves before, in relation to senior managers, it goes to the FCA, and the FCA has to make that parallel determination.
And do you agree with that, Rob?
Well, I think that there is no way that we can go a different way. I think that that's probably what I would say to that. Will we understanding? We're not going to understand the exact nature of what the requirements are until we get better, clearer guidelines from the regulator. But it does feel very much like the nature of an unsavory individual as opposed to someone who's demonstrating a lack of integrity is a very difficult line to draw.
Definitely. There's some really interesting insights there. I guess my big final question is, what do you both think is the high level guidance needed? And do you think overall these changes have maybe undermined the FCA's growth agenda?
Yeah, I think that one of the big questions is who should be policing these obligations. Historically, it was only the regulator that would make determinations about whether an individual had breached the duties under the Statements of Principle for Approved Persons. When SMCR was introduced, as part of that, there was the regulatory requirement that you should do periodic reports to the regulator on instances in which the firm had determined that an individual had breached the conduct rules. And that, I think, largely inadvertently has led to an outsourcing of policing of the conduct rules from the regulator to regulated firms. Because now, as part of the disciplinary process, once you've determined that someone should have disciplinary action taken against them, then firms will make an assessment. Okay, and do we think that this conduct amounts to a breach of the conduct rule? Because we need to then report that to the regulator. The FCA has said in its recent SMCR consultation that it still sees the role of the regulator to take certain cases because it's important for deterrence. And I agree with that. I think it's that in appropriate cases, the FCA should be equipped to take action because it needs the right rules, and it needs to have the willingness to take action so that there is visible policing to the industry of non-financial misconduct, that it's clear that there are punishments imposed where there is non-financial misconduct in the workplace. And I think unless the FCA fixes its rules and puts in place clear evidential rules that make it very, very clear that bullying, harassment, sexual misconduct are examples of the duty to act with integrity, and they would constitute a failure to act with integrity. I think if the FCA makes those changes, then it will feel more equipped to be able to take cases itself and know that if pushed to the upper tribunal would stand behind those rules. As they are at the moment, I think that they're not capable of doing that. And as a result, we see cases, some quite high-profile cases, pursued not as non-financial misconduct cases, but pursued on other bases. And I don't think that is good for promoting effective culture within financial services firms.
I think the Treasury's seeking to push, obviously, the growth agenda and doesn't want the regulators to take any action that's going to restrict that in any way. And there is an element that feels like this is a safe bet in the sense that we've all got a kind of a moral compass and understanding of what the difference is between right and wrong. And do we want our leaders in financial services, the guys and girls that are making the big decisions about our money, our pensions, etc., to demonstrate anything but the highest levels of integrity and honesty? So there is a bit of me that's thinking, you know what, it's a fairly safe bet to promote non-financial misconduct as an issue that will not in any way compromise growth. And if anything, you might say encourages firms and overseas investors to come and place their money here, happy and confident in the knowledge that they've got that safety net of fitness and propriety in the leaders there. I think the FCA may well influence other European competent authorities, and previous to Brexit, the FCA held the pen on quite a lot of the directives that happened in European regulation were reviewed as probably the experts. They probably had the majority of the value of the volume that was undertaken across Europe. And I wouldn't be surprised to see other European regulators pick up the baton in a similar way. You know, reputational damage, etc., seems to be an easier one to carry on with. I would say, sort of finally, does it make UK financial services firms better if this is undertaken and complied with appropriately? Do you know what? I think it probably does improve the culture of the firms overall, and that has to be a positive outcome.
For sure. I think it's a starting point, but then there is a need for more clarity, more consistency, evidential rules, not just guidance, and real drive for firms to want to root out misconduct. Thank you so much for both joining me today. I know I've learned a lot, and I hope our viewers and listeners did too. There were a lot of interesting insights in today's conversation. And thank you to the listeners and viewers watching for joining, and I will catch you on the next episode of Regulatory Unwrapped.